I'm Dane Rose, Chairman of Happiness Data, and in this episode of 10X Nonprofit, I want to focus on reducing overhead and some of the different components in this module. Now, one thing is accepting cryptocurrency. This reduces, and this is kind of in alignment with the idea of reducing the overhead of the 1 to 3% charged by credit cards. I had my assistant look into it, and we could not find a single credit card that would not charge anything. PayPal would not charge anything unless we accepted payment as a friend. And my bank wanted to charge a fee to host a nonprofit. So here were charges from PayPal, charges from credit card, charges from the bank. Now, I have gotten around the PayPal by accepting payment as a friend. I've gotten around the bank by moving banks, and accepting cryptocurrency does not have any fees to it. And with the bank account, accepting checks now does not have any fees. So this, I think, is an important area to work on in relationship to credit cards. Now, I think that there is a significant benefit to making a concerted effort between nonprofits to challenge Visa and MasterCard not to charge fees to nonprofit. And I think the way to do that is to, first of all, calculate the amount of money paid to Visa and MasterCard of all nonprofit donations. And this is where we come to working together as a team and as a block within the nonprofit sector is a very important area. If we can say, for example, that there is $500 million a year donated to nonprofits via credit card, and that 2% of that money is currently going towards credit cards, we can say that we're dealing with a $10 million loss within the nonprofit sector that would be going towards useful purposes, but is instead being siphoned off to credit card companies. And this can lead to, for example, if we're looking at $10 million a year, if that is in fact the number, and we then look at a 20-year period, we're now looking at $200 million being at stake if this remains the same. Now, does it make sense to sign a petition and go about it in a savvy way with partnerships in media to spend $1 million as a consortium to encourage and incentivize top Visa and MasterCard companies to pledge not to accept any fees for nonprofit donations, number one. So if we can work as a group, and if we succeed in that, and in doing so transfer $200 million over the next 20 years towards the nonprofit sector, a return of more than 99% for the 1 million spent, we can now encourage people to use the cards where the nonprofit has made the pledge. We can create a pledge. We can create an award. These are free within the nonprofit community. And we can issue it, and we can list cards that people can use in which 100% of their money will go towards the nonprofit. So this is, tackling the credit card issue. There's another very important thing that we can do, and that is to centralize using blockchain technology. So there's two steps here. One is increasing transparency and ethical standing by moving towards blockchain. And secondly, decreasing overhead in the area of bookkeeping and taxes. Now, in happiness data, we just found a tax accountant in India who for $200 will do the tax return for happiness data. But there is going to be a certain learning curve. And it's also true that there's going to be better pricing for an entire block of nonprofits. And it can actually make sense to employ someone or employ 3 to 5 people to manage the nonprofits within the U.S. sector in a framework that is transparent using blockchain. This creates more safety in the relationships between nonprofits and trust with the public, because one of the things that I think is a very good direction is complete transparency on how money gets spent. Now, this is very positive in two ways. If money is being spent well, it will boost giving. There's plenty of times when I've thought maybe I'd like to give something, but I have no idea where this and how this nonprofit is spending their money. Sure, I like the cause. Sure, I like the idea. But if I have to, if they're raising $100,000 to have a 50% success rate per person for some project versus $2 guarantees a 10% improvement in another human's well-being that's sustainable, it's a completely different picture. And so blockchain technology coupled with effective spending boosts giving. Now, blockchain technology, when there's ineffective spending, boosts transformation, which in turn leads to more efficient spending, which in turn leads to more giving. So the result of more transparency with a commitment to move towards the equation of, efficient energy investment that maximizes sustainable human being. And when those equations are broken down in a way that the public understands, it leads to a very strong motivation to participate and a sense of certainty with being able to visualize what $10 does in real terms to other people's lives. So here we have shared accounting for tax returns, etc., and the centralization and thus greater efficiency around bookkeeping and accounting. This also then leads to the idea of having a very flexible software tool developed for the nonprofit sector that is shared. Now, when we're talking with more than 2,000 to 3,000 nonprofits, And I think that's, a reasonable goal to have at least 1,000 nonprofits partnering in, joint ventures that reduce the overhead and dramatically increase what is actually going towards the cause. You have the ability to refine and custom create software for less money than 1,000 or more individual nonprofits licensing and purchasing software and then making themselves liable for ongoing expenses. And you have the ability to customize things where you can have features. And the features that I think that are most valuable are 1, blockchain, 2, transparent, and 3, live. And what's really potent is a software system in which someone gives a certain amount of money. They decide the level of anonymity they want. They have to, for example, show that what town they're in, but they don't necessarily have to show their name. But that there is a public level of transparency that says this amount was given by someone in this town or someone in this, someone in this region. But not necessarily. That would be optional, that their name is known or not. And they gave this amount, and it was intended for this project. And the money was spent in this way. It's either parked, it's moving along, so that you have packets of money, packets of energy, coming in transparently, being directed transparently, and moving through the organization transparently, and expenses coming in correlated with that intention, to the point where, and then we have correlated to those works the recipient. Let's say it's an eye operation. The recipient has a tool, an opportunity to share the impact of the eye operation. How did it affect their family? How did it feel physically to go through the experience? How did it affect them financially, emotionally, physically, socially, culturally? And then how long is the impact? If you remove cataracts for someone and they're able to drive and start a business, and then their daughter goes to school, that's a heck of a lot of impact for that cataract operation. And so I think it's important to have a tool, a technology that tracks impact in terms of human well-being per dollar invested, such that we have a projection, we have actual data and a probable projection, and that this mathematics is completely transparent, which can allow people to decide whether, for example, a given nonprofit's projections are probably exaggerated or probably accurate. But if this model is online in real time, where it's integrated with deposits, in checks in the bank account and money transfers, and PayPal into the account, and credit card into the account, and Bitcoin into the account, if all of that shows with the level of transparency chosen by the donor, and then it moves through, and the donor can watch where their money gets spent and directly see the impact of their money, I think this creates a deep link with the organization that creates incredible levels of well-being for the donor, meaning that me as a donor, when I donate $200 to Amnesty International, which I did some years ago, I have no idea who that helped. I have no idea what percentage of overhead, Amnesty spent of that money on various stuff. I have no idea if I agree with that. I know I don't agree with Amnesty's mailing because I told them, please do not ever mail me a paper envelope again. And I've been getting paper envelopes ever since that are about this thick. So I feel like a lot of my money is being wasted on those disrespecting mailings. And I don't know what else, if they're wasting that much money despite my request, meaning I gave a request on condition that I not be put on the mailing list, and then they dishonored that statement. So they're wasting money and dishonoring, so I'm not giving to them, you see. And so I think that a software platform that is able to track this in real time does a couple of things. It eliminates book entries in many cases. I guess you'd still have to do it for checks. People mailing in checks, you'd have to someone would have to manually do that, although with online banking, it's possible that the algorithm could scan the checks and based on the address and what the donor had entered as their preference, even do that in an automated system. But when we move towards transparency and software tracking all of this, first of all, the accountants can integrate with an accountant portal for tax purposes, and everyone's using a standardized system. So it's incredibly easy for the accountant, which can reduce tax preparation costs by 50%. Well, that's huge. We're looking at eliminating visa costs, increasing options with cryptocurrencies, and reducing tax preparation costs by 50 to 70% quite easily, and reducing distraction. One of the biggest costs in a nonprofit is the brain power of senior people related to juggling and managing and moving bits of paper and being asked financial questions. If that can be taken out of their purview, so they're focused on vision, there is reason to believe that one could expect at least 10% more visionary thought from directors and leaders. Now, the other thing that this allows people to do is question within the software framework. Any of the donors can vote or question and challenge the nonprofit to produce equations of motivation. Like, what was the reason that glass cups were used instead of local cups from this place or recycled paper cups? And then that either, if there's no answer to that, then that's a good question. We'll do that next time. And that becomes part of the dynamic ongoing dialogue between donors and the nonprofit. When you increase engagement, responsiveness, and participation, you increase commitment. When you increase commitment, you increase donations. I am much more responsive to any nonprofit that shows that they care and are behaving fiscally responsibly and intelligently with any donation that I make. So we then get into another key area of reducing nonprofit costs, which is fundraising. I'll cover that on another video. So reducing overhead costs with credit cards, tax preparations, software, and senior leadership's time and attention.